The Call is brought to you by CMC Markets, a world-leading online trading platform for CFDs and shares around the globe.
G'day everyone, welcome back to the afternoon here on ausbiz. Great to have your company, and as usual we kick off the PM with the Call live here from our Barangaroo studios. 10 stocks you've suggested we have a look at. I put them to two experts and I chuck in a stock of the day. We do it all in 60 minutes to give you some guidance. And what a panel we have today. Mark Gardner from Maqro is with us and Michael Gable from Fairmont Equities. Good afternoon to you both.
Good afternoon.
Better into the week on the markets, Mark? You happy?
Well, yeah, a lot happier.
Is it the start of the zoom back?
Probably not. Probably we might zoom back to towards just shy of the record highs again, and then we might zoom back down to the bottom. I think we're fairly range bound. I think
it is pretty skittish.
It is very skittish. I mean, we were trading, significantly lower Tuesday. It's only been a 4-day week. It feels like it's like a month's range almost, just about in a week. So. And VIX is sort of starting to subside again, but has spent most of the week above 30. So hopefully we'll get things calming down a little bit, and I dare say, next month, fingers crossed, will be probably just a little bit calmer. We've had market updates from a lot of the miners, a lot of these quarterly updates from a lot of companies. The big tech's out of the way now for
in the US.
In the US. So all the normal companies are now reporting, which doesn't tend to have as much of an effect. So. Things may calm down just a little bit.
Are you getting clients to nibble away?
Yeah, look, we were sort of trying to take advantage of a lot of those lithium, nickel stocks and things were hit quite hard. So starting to have a little bit of a look at the retail sector because it's fairly beaten down as well. But yeah, no, it's been a good day today. There's been a couple of upgrades after those quarterly updates and say nickel mines and things like that. So,
which are your favourites? What are you looking at?
So nickel mines, Oz Minerals, Pilbara and Liontown were the four that we were sort of soaking up. But Liontown came 40% off its highs in about 2 to 3 weeks, and nothing had changed or been announced. So. We waited for the bleeding to stop and sort of started stepping in a few days ago. So,
Michael, how are you seeing the market at the moment?
Pretty similar to Mark. So I think if you look at the S&P 500, it's been in a range. Clearly, it's at the bottom of that range, around 4,200, and bounced off it last night. So you'd assume that there's a good chance that it recovers somewhat from here. But I think any meaningful recovery in the index is going to be hard to come by. I think what could spark that is either inflation cools off a little bit, or growth isn't looking so crash hot that the Fed Reserve needs to start scaling back those interest rate increases. So I think unless the market starts to catch some sort of surprise as to what interest rates will do, that is, scale back how many they're going to lift them by, then that would be a rocket for the market at the moment. I think it'd be range bound as well. But I share Mark's sentiments in terms of some of these resource stocks. So all you could really do at the moment is trade some of these ranges. The resource stocks have really good trading profiles. PLS, Liontown, similar stocks. They're all back to the bottom of those recent ranges. So we're buying some stocks today again, and if we can trade them back up to the top and exit again, that's all we could really do at the moment. Absolutely.
Interesting times. All right, let's take a look at some of the stocks. First 5 stocks we're going to be taking a look at today. Mighty Craft, City Chic, if you're talking about retailers there, will be interesting to have a look at. Quick Step Holdings, Green Technology Metals, and Med Advisor. Stock of the day, shining the spotlight on Nitro Software, reporting 61% growth in annual recurring revenue. Looking ahead, the company is expecting improved operating earnings FY22 based on lower operating expenditure, reflecting what it calls enhanced business efficiencies, while also forecasting a move forward toward a cash flow break-even profile in the second half of next year. The return to cash flow break-even was foreshadowed by Chief Executive Sam Chandler at our Tech Decoded event yesterday.
So we were investing last year, to get more scale and take advantage of the market opportunity that was in front of us. Same this year, but we are returning the company back to that kind of cash flow break-even profile in the second half of next year. So we've gone through a couple of periods in the company's life where we've chosen to invest heavily, usually for sort of a couple of years at a time. And we're sort of doing that, last year and this year, but we'll return the thing back to the cash flow break-even profile, towards the second half of next year.
Okay, anyone who was impressed with that yesterday and bought some stock is feeling pretty chuffed this morning, let me tell you. You can still access that event to watch as catch-up, featuring the chief executives of Nitro, also EML, which we talked about here on the call yesterday, Life 360, which we did as well, and Technology One via ausbiz.co/techdecoded. Stock of the day, Nitro. What do you think of Nitro, Mark?
Yeah, obviously the market received the result really well today, up about 25%, which is fantastic until you sort of roll the middle mouse button back and see the scale of the chart. So it's fallen from about $4 sort of start of the year with all that tech, all the tech coming off. Look, they've got good management. They've got really, big customers, solid customers, BP, Lloyds Bank, Colliers, etc. So,
so it's a productivity tool, isn't it?
Yeah. So it's
I
think it's mainly for PDF documents and things,
Yes.
and electronic signing, etc. Coincidentally, had a new client who works at Colliers, and he was, strangely enough, discussing how easy that thing was to use. Account opening documents are the bane of my existence sometimes. And they were returned in quick, smart fashion. So it's obviously a pretty easy and good product to use. Business-wise, they're doing all the right things. Obviously, they need to get. It's just not the market at the moment for these companies that aren't quite making money. God knows where the price would be, if they'd come out with this result a year ago
Well, Goldman Sachs even has a price target of $450 now.
Yeah, no, look, I think with the consensus, I think there was been an upgrade from all parties, all four analysts that cover it this morning. One of them might have even been in the $6 range or something silly. So I'm not 100% on that, but everyone upgraded it basically on the back of this. But look, it's you're buying it at the bottom of the range. Whether you're going to get, this is a great catalyst, obviously, but whether the tech storm sort of passed in the US, which is probably going to be the defining price action factor for the next sort of three months until they have their annual report. So look, for me, tech's generally is just on the watch list overall. Really, like I've got our favourites, sort of Hub24, Ordinate, and say Xero, and we don't have a big chunk of those. So until I'm getting
Ordinate's back to $6.
I know. So until I'm fully allocated there, I'm probably not looking outside of those three stocks, because I think those high quality companies will be the ones that turn sort of first. So,
Michael.
Yeah, interesting. The chart earlier for Nitro, it started at $1 when COVID kicked off, and then all these share prices went through the roof because rates were going down. Everyone was looking at these sorts of growth companies that could even benefit from the working from home environment. So $1 to $4, but of course all the way back to $1 again. So that was a period of the market where it didn't matter if these businesses were losing money, as long as they were gaining market share. It didn't really matter. But clearly that's been turned upside down over the last several months. So businesses like this, which are not profitable, no one wants to pay the huge premiums. So I think that will persist for a while. So longer term from here, it'll be hard going for a company like Nitro. On paper, they're doing the right things in terms of signing up the right clients. They seem to be in a good space, zero debt. That's all great. But if your cash flow break even is second half of next year, which is what they announced today, probably a little bit too far in the future, I think, to see any serious buying come in. But having said that, look, I think it looks great as a trade for a few days. When I look at the chart, there was a low in March that it dipped under in the last 2 days, and for it to gap up today and rally on massive volume. I know it's up 20% today, but this is the type of stock that might just rally for a few days. And,
right.
You could probably be in and out for a quick trade, but longer term, I'd be steering clear for the time being.
All right. Let's get into the stocks that you want us to take a look at. First up, Beth wants a view on Mighty Craft. Beth says, I like the idea of investing in craft beer. Good on you, Beth. But want to see what the experts think of Mighty Craft as a small part of a portfolio. Mighty Craft was started a couple of years ago by some executives of a couple of our big brewing companies, and it takes an interest in craft breweries and distilleries. I think Kangaroo Island Distilleries is part of the portfolio, and they go in, they invest money and do all the marketing and admin, and let the founders of these breweries and distilleries get on with the job of making the profit, making their product. What do you think of Mighty Craft, Michael?
Yeah, I mean, it seems like a great idea as you described, David. If they could centralise all the marketing and find synergies that way and just pick up all these breweries and bring them together, then there's cost savings, and hopefully that that works for them. Of course, we all know during lockdowns, alcohol sales went up. So this business, obviously they derive revenue through the liquor stores as well as sort of on-premise sales as well. I think on-premise sales are a little bit smaller. So it'd be interesting to see how that, what sort of shift takes place over the next few months as people are going back out. Are they spending the equivalent amount in the pubs as they were just sitting at home watching TV, drinking beer? So look, it seems like on paper everything looks good. In terms of would I want to buy it now? I mean, when I have a look at the way this is trading, it's not very liquid. So as I often say, you've got to keep an eye on the liquidity. So at the moment, we've got about $35,000 on average being traded per day. So that means you don't want to be going out there buying 30 grand. No. You've got to think about the liquidity. So you need to buy something that's, you need to buy a portion that's very small. And also I like something that's got a bit of momentum to it. And at the moment, the share price isn't going anywhere. So might be a great business, but at the moment, I don't think you're going to realise much from it. So probably one for the watch list, but not to buy now.
Okay. Mark, I know a bit about it because a few footballers are in there.
Yeah, right.
Invested a few AFL players because the executives of it sort of were part of the big breweries beforehand. So interesting idea, but as Michael said, share price hasn't gone anywhere and liquidity is low.
I mean, it's almost the sort of a pre-IPO sort of stage, really. Overall, it's great to be listed. I mean, you're in if you're buying this. I mean, I think you've got to have at least a couple of year time frame while it gets to scale. But
and the other thing is they should have a shareholder discount on their products as well.
Well, look, I mean, just don't rule it out. So certainly might get that liquidity up there if they start giving away discounts. But look, they're all they're founded. It's a very smart business plan in terms of it lets the experts get on with what their expert skill is, as opposed to I mean, so many businesses are have a very skillful craftsman or expert in their field, but the business side's what trips them, trips a lot of those firms up that reach from that sort of small, medium size to a larger size. So I agree with Michael. It'd be on the watch list for now. I think you probably got better. I'm tending to stick with the bigger end of town just while volatility's the way it is and the market's a little bit unstable and we've got a lot of geopolitical and economic uncertainty. But look, I think once this gets to scale, it's very sound business reasoning behind it, and it really could be one that could really take off. But I don't think it's going to hurt you to buy it with momentum as it starts to get bigger.
Particularly if you've got an interest like Beth has, that likes the idea of investing in craft beer, a tiny amount, just
buy $1,000 worth or whatever. It doesn't have to be But
Investing's got to be fun as well.
Yeah, that's exactly right. Otherwise, you'd invest in a fund, so it. And then probably not read the PDF they send you every 3 months.
Yeah, that's right.
So, but yeah, so look, it's got good management behind it. Obviously, those ex-CUB. But yeah, at this stage, look, I think you can probably safely buy a small amount, but I wouldn't, given the liquidity, I wouldn't probably be.
Because when you're investing, there's the opportunity cost of what you're missing out on elsewhere.
Absolutely,
and there are better ones. So, thank you for that, Beth. Izzy wants to know if City Chic is one of those better opportunity plays. Mark, Izzy says City Chic just keeps getting smashed. Obviously, this email came before this week.
Yeah,
I feel like it's been unfairly sold down. Of course. It's the women's fashion retailer specialising in plus size fashion in New Zealand, Europe, North America and United Kingdom. Has been smashed, but had a good update this week, didn't it?
Yeah, had a really good update. There's been a slew of upgrades today as well. And look, it's 41% Insto owned as well, so there's some really good backing behind it. They really got punished back there in reporting season because they basically said that they drew down on their cash and built up their inventories, which obviously the market saw as a bit of a gamble. And look, the gamble's really paid off now because their sales are up quite considerably, like 25%. So, that obviously proves to the market they know what they're doing. Consensus, based on the upgrades, which were all 4 or 5 banks, or the big research firms today, has got consensus, above $4. So
$4 would be back to that disappointing earnings result you see just at the end of
which I think is
end
justifiable.
Of January, is that?
Yeah, I think that's justifiable. So.
Interesting.
And look, there's a lot of retailers out there at the moment. I mean, Harvey Norman's at the bottom of the range. Nick Scali's getting absolutely punished. They're all great. This one doesn't yield, but those two, great yielders. They're low PE. I think with a lack of any sort of general market updates or an earnings report from those guys. Momentum's just compounding or snowballing to the downside. So, I mean, you've got Nick Scali at nearly $10, and realistically, they're off about 35% or something since their last earnings report. And Harvey Norman's yielding north of 8%, I think, fully franked or something at the moment. So
8% for Harvey
it's
Norman
fallen.
yield.
It's fallen quite considerably after it went ex-dividend. So look, I'm not. I mean, I've had a small amount of Nick Scali for a while just because we were trying to find some safety, and that hasn't panned out. But probably start to wait till they turn. Obviously, this one has turned a little bit today. I think you can definitely afford to probably have a nibble at this one.
Okay.
But yeah, look, I think as we start to stabilise and turn around generally in that sector, I think there's some really good value opportunities there. I'm probably not brave enough just yet, but it's certainly a sector that's looking pretty cheap. So.
Michael?
Look, similar thoughts. Interesting to see that February result where there was the concern over the higher inventory, and then it's worked out in their favour recently. But that highlights, I guess, a key issue that I just want to avoid with companies that have to buy something, on-sell it, try to still make a margin without paying too much for the goods. You've got supply chain issues. So any business like this, there's still just so much uncertainty because of those supply chain issues, inflation. And we just don't know if, it worked out well for them this time, but maybe in a few months from now, there might be a misstep. So, you've got issues there. And then I think I'm in two minds about, whether discretionary businesses may be affected by a possible recession. We don't know if there's going to be a recession later this year, but that's just in the back of my mind as well, that there's probably a few too many negatives to start stepping into stocks like this. I'd like to see them turn around. I mean, having said that, maybe the bulk of the damage is done, and maybe this is peak fear. I'd rather just see it turn around. Just too many things can go wrong in these type of businesses at the moment.
All right, our next stock, which Jack wants a view, is Quick Step Holdings. Really, carbon fibre manufacturer, composites for the aerospace, defence, automotive industries. Has Northrop Grumman, makes wing flaps for the Joint Strike Fighter project. Interesting business. Jack says, looks to have a unique offering. Is this an under the radar play, Michael?
Yeah, potentially. I mean, this is an example of a stock that I think is now turning around in terms of share price momentum. I mean, it used to be a $10 stock going back over 10 years ago, and at the moment it's 70 cents. So it pays to wait for that turnaround, because you just don't know how much damage can be done. But yeah, big turnaround there in terms of share price. It's bounced from about 40 cents to this 70 cent mark over the last couple of months. Good volume. So it looks like the buying's coming back in because their sales are getting back up there again. They seem to be back on track. They do have a few patent technologies. Look, there was an announcement a few days ago. Their earnings temporarily being hit by floods and COVID, mainly in their Bankstown warehouse, but obviously that's short term and nothing structural. So, look, I'd be happy to take a nibble at something like this because of the momentum and the sales momentum as well.
Right.
Yeah, look, it's an interesting company. It's got its fingers in a few pies. Yeah, look, it's a fairly low margin business, and look, but it does seem to be turning the corner a little bit. Interestingly, it sort of showed how small. Reading up on the flood damage to the Bankstown operation and things, pictures of going through the annual report and things showed how small the company really is. So it's only a 46 million market cap. That's sort of the end of the market at the moment. I'm really hesitant to play in, just because realistically, if negativity takes hold, as we've seen, things can get hit for no. Even good quality companies can get hit for next to no reason. So you can kind of end up sort of holding the bag for a long period of time. But look, from what I can see, they're going cash flow positive. I don't have anything against the company. I think I agree with Michael. I think that looks very promising, but it'd be sort of this thing that I'd be considering in more market conditions where you've got to.
We had Nathan on the other day saying, "Look, micro caps, he's just avoiding at the moment because it's not the market for them."
And it's not that they're bad companies.
Bad businesses.
It's just that they're they're rising tide floats all boats, and when that happens, that's when those micro caps severely outperform, and conversely, it's when they underperform as well. So stuff like this, I'm 3 to 6 months away from sort of considering as an investment, but definitely worth. It looked to be a pretty good quality company. So.
Okay. Mark, earlier in the program, you were saying you're nibbling at a few lithiums at the moment. Nita wants a view on green technology metals. It's just committed to, or just raised some money to explore and develop lithium assets in Canada, and a feasibility study for the Seymour lithium mine project. Is this on your radar?
Yeah, look, I hadn't really seen this one before. It hadn't come on my radar. It probably, in terms of filtering at the moment, the lithium, we're looking at considering in lithium producers or a company that's coming into about to produce, because realistically, if you're any more than 2 years away from producing, there's a glut of explorers and miners that are going to come on. Lithium's not that rare. Yeah. So really, that lithium price is only going to stay elevated for so long, and that's why stuff like that. So, for instance, Liontown and PLS, they're going to really take advantage of that elevated price before a glut of mines sort of open. But these guys, the US is really trying to lock down strategic battery minerals and materials, mines, etc. This is, as the crow flies, it's very close to Michigan, obviously, and there's they can ship straight across. They're looking at doing a vertically integrated lithium company model, and in being a little bit more end to end. It's sort of early stage, geographically favourable is probably what I don't mind it. But it's I probably wouldn't touch. I'd definitely keep it on the watch list for now. But we're very much sort of focused on the producers and for the time being, because there's just a lot of concerns about there being a glut of supply of lithium, say in a 2 to 3 year period. So
all right, Michael, what about you? I noticed Lithium America invested in the float, and they're worth $3.5 billion. US dollars on the American market.
Yeah, so it's a good sign. I mean, in terms of what I'd recommend for my clients, I agree. I'd rather stick to the larger end. However, if you're looking at something at this smaller end of town, I think this one does look interesting. Investor there picking up 5.2% holding. The other interesting thing to see how all this has worked out over the last few days. I mean, a lot of these smaller companies have, because of the huge spike we've seen in the share prices up to sort of early April, a lot of these companies are raising money. And often that can result in a decrease in the share price because shareholders get diluted and they start...
Good decision from the executives and the board, take advantage of the high price, but then it dilutes you, doesn't it?
Yeah, exactly. And I mean, that's a problem, and a number of these stock prices have fallen back. This one, interestingly, the raising at 105, and I think today it's trading at about 117. It was only announced a day or two ago. So pretty good price reaction. I mean, it's basically at the top of its range, whereas, again, most lithium stocks are well down from where they peaked a month ago.
Yep.
So, if I was looking for a stock in this space, I like the way this is got good buying support on market. They've picked up an investor there, cornerstone investor. Look, I think it'd be worth a speculative buy if I was looking at that space.
Okie dokie. Alexander, Michael, wants a view on MedAdvisor, which is, it's called a medication and adherence platform. Basically, it connects patients with their doctors and they can check up they're taking a medication, and gives instructions to patients and alerts on when to take your medication.
Yeah, look, it seems like an interesting business, great technology. They're expanding in the US, so there was a recent announcement that they're going to install a CEO that's US based because the current CEO is unable to move over there. So they've got the big plans, and we just have to see if they can execute it. So at the moment, again, as someone who watches share price reactions, I just don't like the way that this one's been trading. It's sort of at the bottom of a large range there, and there's no real sort of momentum in that either. So look, I think it's probably one worth watching. Revenue's growing. They've got these overseas prospects. If we start seeing results, maybe it takes off. So one to watch, but again, opportunity cost, as you mentioned earlier, David. I'd rather, we're looking at lithium names, all these exciting things happening, places to make money. This one doesn't seem to be doing anything at the moment.
Mark, though, it's in, who bought a platform? Was it Pfizer paid a lot of money for not in this particular, but a med tech sort of platform in the past? So I don't
recall that transaction, but look, this one, it does look interesting. I think it's got an ex-managing director of Xero involved as well. So it's very cloud-based. The acquisition was quite smart because essentially they were bringing the software and the US-based business is bringing the clients, essentially. So there's been a big uptick there in subscriptions, etc. Basically, via the acquisition, both parties weren't doing so well at what the other one was doing. So, a lot of good synergies there. Starting to look at a lot of non-cyclical sort of businesses. Obviously, with, as Michael pointed out before, inversion of yield curves and things is usually, not a certain but a fairly reliable indicator of a recession potentially on a 24-month horizon. So, starting to really have a dig into those sort of non-cyclical healthcare stocks and things. So, it seems very usable. I think, but Chemist Warehouse has something similar as well. I think Henry Jennings it's been on the call before this stock, and he mentioned that. you know, there's a lot of the pharmacies out there that have got stuff that's similar. So, but look, I reported this morning, up about 4%. It was taken quite positively. So, again, look, you know, apologies, I'm filling in for Luke Winchester today. Yeah. My small cap knowledge is not quite as good as Luke's. So, but I'll do my best. But yeah, look, it is burning cash a little bit, but the revenue's growing. You know, again, I think it's a bit more of a watch list sort of scenario for me as well. But yeah, positive signs, and I think putting a US CEO in, given the failure rate of Australian businesses trying to take advantage of the bigger market in the US, I think it's, you know, obviously convenient actually to have a US CEO be appointed realistically, because they're going to have a lot more insights into the market over there. So, and that seems to be where a lot of the potential sort of blue sky growth's coming from. So, yeah, I'd like to see how the new CEO goes, and how another probably 3 to 6 months of how that US business starts to expand. But yeah, no, it looks pretty promising.
Watch it. Pfizer paid $100 million for ResApp, which was a Brisbane-based mobile app, which that's right, you blow into your phone and it gives you a diagnostic on COVID and all that sort of stuff.
Right.
Blowing into the speaker of your phone, which is a bit weird, but anyhow, made the founders $100 million, so that's right. Okay, let's recap the first 5 stocks at our stock of today. Nitro, a no from both Michael and Mark. Mark says certainly put it on your watch list, but there are probably bigger tech stocks to look at for any turnaround in the tech sector. Mighty Craft, a no from both. Have on your watch list, so interesting business. City Chic, a no from Michael. Have a nibble from Mark, who's looking at a few of the retail stocks at the moment. Quick Step, a no from Mark. Michael is impressed with the business. Have a bit of a nibble, get set there as well. Nibble is now part of the calls vernacular. You know, don't overcommit, just sort of put your toe in the water. A nibble portfolio. Green Tech, a speculative buy from Michael, a watch from Mark, and MedAdvisor, a no. Here on the call, we've been tracking our own high conviction fund, which is a fantasy fund picked by our investment committee. The latest episode of the committee you can watch at ausbiz.com. And don't forget, the investment committee is on next week, the latest one, the monthly meeting. So watch out for that. They recently added JB Hi-Fi, Pro Medicus, Linus and Incitec Pivot to the rest of the stocks, holding 20% in cash. Since the 1st of March, the fund down 0.8%. So keep sending in your requests for the call, because that's the first filter to go up to the investment committee. If a stock gets 2 yeses, it gets referred to the committee to see if it should go into the portfolio. This afternoon at 4 p.m, grab a wine and we talk to the experts and just chat and gossip about what's been happening in the market. And a few wines and beers certainly loosens the lips of our experts, so we get down to the juicy stuff. They're always very guarded. Let's take a look at our next 5 stocks. Family Zone, Sierra Resources, 9, Zoom to You, and Life 360. Mark, Family Zone, Janice wants a view on that. This is the cybersecurity platform for families, kids and schools.
Yeah, look, I had a good look into this, having a fairly large blended family. Yeah, look, it's cybersecurity for schools, families. It looks really interesting. Their subscriber growth's been really, really solid, recurring, and subscriptions are all doing really well. They've globally they've done fantastically in terms of rolling out the platform. Yeah, look, again, it goes back to the sort of the being in that tech sector at the moment. It's probably not my preference of where to be putting money. I'm sort of more looking at other sectors that are going to have a bit more of a favourable outlook. But look, as far as the product is concerned, it's something that I think is. There's definitely a massive gap in the market for it. Obviously, looking into it to roll it out, and for our family, my only concern was that I googled bypass family zone, and there was about 5 different ways which all the kids have been sharing between themselves on Reddit. So I hope.
There goes
Isn't
business
that
model.
so typical? Mum and Dad introduce this platform, and the kids are sharing how to get around it. So Mum and Dad don't really know what you're doing.
So hopefully families don't have their guys watching that, but. I guess it's the first thing I thought of is, I'd be trying to bypass it.
You've got 6 children?
No, look, we've got a blended family of 9 children.
9 children,
so,
okay.
Yeah.
Well, you've got your own football.
But I do like the, in terms of, that's more for the content stuff, but in terms of being able to set periods where they can only do study and certain sites are blocked, etc. We're both, my partner and I are both working, so to be able to set remotely outside of the house, that the kids can't be, the kids can only go to study sites, etc. Before we get home, and there's not a mad scramble for them to get off TikTok when we walk through the door. I think it's a great product, but yeah, look, it's just wrong sector for now. So, right. But it definitely. They're doing all the right things, and I think this one will be successful long term. So, I think you may get it cheaper over the next sort of 3 to 6 months.
You are certainly the best analyst for this, and a pretty savvy tech dad. If he goes bypass, how do you bypass family zone? Find out. You got to keep one step ahead, don't you?
Try to.
Michael, what do you think?
Similar thoughts. So. They are growing their revenues. It's a good space to be in for a business. They're expanding in the US, but they're losing money at the moment to do so, and that's just not the type of business that the market wants to invest in, and that's why I think that explains for much of the recent falls from about 80 cents to 40 cents, unfortunately. So it may well get cheaper. If it does reverse from here, I've noticed on the chart possible inverse head and shoulders pattern, which basically implies if we get a breakthrough 50 cents up through that level, then I could be confident that a low is in place,
right.
And therefore there might be some positive momentum there to follow. But I think the odds are at the moment it probably gets cheaper while those stocks remain on the nose.
Okay. All right, Michael, Philippa wants a view on Syrah Resources. Philippa says it seems to be doing well after the last update. Is there more upside? I don't currently hold it. It's has a few interests. The biggest one, though, is a graphite operation in Mozambique. Seems to generate all of the revenue, but it's got exploration leases around the world.
Yeah, so this is an example of a business that is in the right sector. Of course, it's battery metals. There is a story there, and maybe they end up running too hard, but I think there is still further momentum here. They've recently announced a grant from the US government to finish their anode facility over there. So they've got enough funding to do that. So the business, it's on the right trajectory. Share price is heading the right way. Looks, there's good momentum, good volume coming into the stock. So yeah, as a speculative buy, because they are still quite small and they're not turning a profit like the big boys. I think if you're looking at that space, then yes, it does look like something worth buying.
Okay, spec buy. What do you reckon, Mark?
Coincidentally, this was one of Maqro recommendations from a couple of months ago, around the 135-ish sort of mark. We sold 2 days ago, basically, on the announcement, sort of in the 190s, and switched to Liontown. So
right.
I think it's probably run for now. If it was producing and if it was making money, we'd be very inclined to hold on. It probably, the thematic I think is going to stay true. But look, now realistically, you're probably looking at sort of 2 to 3 months without any sort of news catalyst, etc. think the stock will probably settle back down somewhere, between that 130 to 190 range, and you'll probably start looking to pick it up again. But in that sort of battery material space at the moment, I mean, Liontown traded nearly 220 at the start of April. Was back at 137 at the time, and we thought obviously banking some profit, and it was a sensible switch, really playing into the same rough thematic basically. Graphite obviously being a fair bit is bit more rare. Hopefully they execute, and that'd be the sort of thing we can you'd be looking at holding it long term. But I think at the moment, as I said, we sold yesterday for better opportunities. But look, we'll definitely have interest again if it starts to pull back down towards the middle of the recent range basically. So it's definitely in the right space.
Okay. Theo wants a view, Mark, on Nine Entertainment. Hard to ignore Nine with the upcoming election. Is it a buy? Was Theo's comment. Of course, Nine owns all the Fairfax newspaper, the old Fairfax newspapers, the radio network, and also Channel 9, the free-to-air TV network, and Stan as well, the streaming network, which is doing well.
I've had this on the call a few times actually. I would sort of echo what I've said previously. It tends to basically the month leading into when it reports and the month of reporting on the 6 month ends are the 2 months that it rallies from a seasonal point of view. We still hold it at the moment. We basically trimmed out of half from the announcement or just after the dividend. Normally we would sell out of the whole lot. That trade's been very good to us, as you can see on the chart there, for the last sort of 3 to 4 earnings cycles. So I think the election coming up, there'll be big ad spending. They got the rugby for a steal on Stan. And I think as well that there's going to be Domain, that shareholding in Domain is going to be, I think with the people starting to worry about property, I think there'll be a lot of movement in that market as well. And they really seem to have got themselves together quite well. They were really on the nose there for quite a long period of time, and I think their management restructures and they've got their costs under control, etc. Now, I'm happy to buy it. We're sort of buying it here between anywhere between 270 down to 250, and looking at sort of a $3 range. But I'd probably be targeting a little bit higher. I think that the ad spending, particularly from some of these fringe parties, is kind of fairly obscene. Amounts of money getting put into.
You're talking about Clive.
Oh, look, we won't name names. I'll probably get sued. But look, I think they're going to do really, they'll do really well, and you'll pull a really nice dividend out of it.
So you buy these levels?
Yeah, I'm happy. Look, I'm happy to buy dips in this. Look, I think you'll probably have until July. It doesn't tend to move, as you can see. The range for the last year has been pretty much what we've that. So look, you probably wait for a weeknight in the S&P or something like that, and you can hopefully get it down around the 250 range. It already yields about 3%, so I think their revenue and earnings will be considerably better. Even though they'll be a one-off, you should probably get a decent dividend out of it. So, I think it's a buy. Seven West is
a buy around 250.
Yeah, 250, 260 is fine. Look, to be honest, I'm happy to buy it here. Realistically, I'm happy for it to be a part of the portfolio, because I don't think it's going to go south, and I think you need defensive stocks like this in your portfolio at the moment.
You're mentioning Seven West as
similar
or not?
Seven West had a bit more of an upward run, but they seem to be doing pretty similar. Pretty similar things. Nine's probably, just because of the margin of safety in that range, I'd probably prefer 9 at the moment, but it just, Seven's a little bit more volatile in the share price. So if it does dip further, well, I guess you make that decision there. But the sector looks pretty good.
Michael?
I'd also wait on this one. So there's obviously a number of positives, but it is very, very much has been stuck in a range for over a year now, between that sort of 250, 260 mark up to about 320. So for me, either buy it at the bottom of the range or if it can clear that top part of the range and just get out of there, then there'll be sort of some clear sky for it to make a bit of a run. So, look, number of positives, probably a couple of negatives worth mentioning to keep an eye on. Domain and Stan each contribute about 14 to 15% each to earnings. What's going to happen to property prices? So let's keep an eye on the ad spend there for Domain, and of course with Stan, achieving great growth, but as we saw a few nights ago with Netflix, I just wonder if that might have analysts adjusting their valuations of the Stan component within 9. But generally, look, if it was back towards that 250, 260 mark, I'd seriously consider it.
All right, Fred wants a view, Michael, on Zoom to You Technologies. It's basically a tracking platform, isn't it?
Yeah, so parcel delivery
GPS
and
tracking, parcel logistics.
Yeah, which is obviously a fantastic business to be in during lockdowns. It looks like these guys listed just as we were coming out of lockdown last year, unfortunately. So that it shot up after listing and has settled back down. Again, this is another one of those technology-based companies growing very well, but still losing money. So again, it goes into that category of it's a little bit on the nose at the moment with the market. It's a $50 million market cap. I noticed it, again, we've got a liquidity issue with this, about 20 grand a day traded. So like that first business that we spoke about, the liquor company, if you like the business here, maybe 1 or 2 grand just to make sure that that you've got a bit of liquidity there. Yeah. But I think at the moment it's for a while, at least for a few months, I don't think it's going to do much in terms of share price.
Mark?
Yeah, I'd absolutely echo Michael's sentiments there. Look, it went really great on the IPO. If you're lucky enough to get some in the IPO and maybe have an offer in, which we sort of always recommend to clients with the to try and bank some profits, and you can't really lose on the trade, which is usually a pretty decent tactic. So that last mile delivery services is going gangbusters in the US. You've got Amazon doing something similar at the moment. You're competing with Uber potentially as well. But look, they had an update yesterday. The revenues are up, 120%. They've got a lot of drivers, a lot of customers. The addressable market's quite big. I just don't. It's really, really thin volume. I don't think you need to necessarily be there, but it's definitely one I think we should be keeping an eye on for sure, because the management seems quite good. They've executed so far on everything they said they were going to do. At this stage, I think it's probably just risk you don't need to have. But if it starts to show some higher volumes on the day and drift up because at a market cap of 30 to 50 million, realistically, if you're buying it, 30% higher than here with momentum, it's not a big deal. Yeah. It really isn't. So that'd be the sort of thing where, generally, if a client came and asked me about this, I'd be putting in alerts in my system where if the daily volume is double, it'll send an alert to me and my client, and basically saying, and until that point, probably just sit on your hands, because then you could be sitting waiting for this to gather momentum for 2 years before it actually does. So in the meantime, you could be utilising that money elsewhere.
Okay. Right. So a no on Zoom to You. All right. Super Dad, another one for you. Randall wants a view on Life 360, which is again a sort of family tracking app. And certainly been in the news this week. Shares crashed on Wednesday after the founder and chief executive said it's halted its plans to dual list in the United States. It's a pretty decent jump in revenues recently, hasn't it?
Yeah, it has.
Still big losses.
Exactly. Still big losses. I'd be more...
Look at that, $13.72 end of October.
Yeah.
To $4.
Yeah, look, when I'm looking at tech stocks at the moment, and I'm just putting my hand over the top of the chart and just trying to ignore that happened, because all of a sudden you get in a situation where you're going, it's got to be cheap at $4 because it traded 14. Well, the reality is that it probably shouldn't have traded beyond 10.
That's probably great advice to all of us mug investors to do that as well. Put your hand across the peaks, so if you don't get conned into thinking you're picking up a bargain.
Well, because there's nothing to say that that top 40% was just complete hot air, really, which obviously it may turn out to be. Look, customers are growing. I think they're pretty. They're trying to diversify the amount of services, because realistically, a lot of the stuff that can be done on Life360, you can individually do very easily on Apple and Google Android platforms. Yeah. From a personal standpoint, I found it the concept of the app a little bit invasive. I mean, I wouldn't consider it for my family. I don't need to know where everyone is at every single stage. Truth be told, so anyone then.
Sometimes you don't want to know.
Well, that's just me, but it isn't making money, and whilst there's growth there in the customers, etc. I think as parents, new parents these days around in their mid-30s and 40s are probably a little bit more tech savvy. This business model would have worked, I think works really well for customers who aren't so tech savvy, but I think this will be diminishing customer base, because most people who are having kids grow up 5 to 10 years of age who are getting mobile phones or whatever, and now, look, they're going to be tech savvy enough to do most of this for free themselves. So I'm not a fan of the business model there. So,
Michael?
I have to agree with Mark again. I mean, my eldest goes to high school next year, but I still, and he's going to need to carry his phone around and do all that sort of thing that kids do nowadays. But I was saying to my wife the other day that I'd like to give him a crack at having some responsibility and not actually track where he is. I mean, if you track them until they're 18 and then suddenly they're let free, I mean, God knows what they're going to do. Yep. If they had mum and dad watch every minute of their day. So I'm not. Hopefully, I don't get to the stage where I just get it anyway. Just give up. But that's just me. I mean, maybe most people are happy to use it. But again, it's, I guess, similar to some of the other stocks that we've looked at. Loss-making tech on the nose at the moment. No one wants to buy something losing money, and it's a great example for people looking to bottom fish, or quote Warren Buffett that you need to buy things when others are fearful. Again, $14. I mean, a month ago it was $6. So even if you're bottom fishing at $6, and now it's $4, you've already dusted a third of your money, thinking that it can't surely get much cheaper than $6. So I think Mark and I must have a similar style in terms of wanting to see that momentum there, because it avoids potential disasters like this. So look, it might be a fantastic business for a lot of people, but maybe we just keep this one on the watch list.
All right, you bring up Buffett, the Oracle from Omaha, speaks on Monday, our time, I think, the Berkshire Hathaway annual meeting, and Mark Morland from Team Invest is over there for it. So we go across to him and see what the wise one and Charlie Munger have to say on Monday. Let's recap the fortified stocks. Family Zone, a no from both. Sarah, a speculative buy from Michael. For Mark, he prefers Liontown as an alternative and recently sold out of Sarah. 9, yes, at these levels for Mark, if you can get it around 250, he'd be much happier. Buy it on the dip. Michael agrees with the dip around 250. Zoom to you, a no. Life360, a no as well. So that's our 10 stocks. Mark Gardner from Maqro, thank you for joining us here in the studio.
Cheers,
Great to see you. Have a good weekend. Likewise, Michael Gable from Fairmont. Good to see you, mate. That's our show for today. If you've got any stocks you want to send through to our panel, email them the call at ausbiz.com.au or tweet us using the @AusbizTV handle. A reminder to find all the stocks in the calls portfolio at ausbiz.co/portfolio. And Have a great weekend. I'll see you for the last call at 4 p.m. and we'll have a drink and a chat.
The Call is brought to you by CMC Markets, a world-leading online trading platform for CFDs and shares around the globe.